Good morning, ladies and gentlemen. Welcome to the Monday Morning Minute. It is April 7th, 2025. Markets were crazy last week after we had the announcement of tariffs from President Trump. They were broader, a little bit more robust than most folks were expecting, I would say. And markets are reacting very aggressively to the news that they're taking as being very, very negative. Ultimately, what we have is a scenario where markets have to reprice securities and risk. This happens when there's major events, sometimes like COVID, for example, trying to figure out what companies are actually going to make in the future, what their earnings should look like. This is the exact same type of scenario in that supply chains will be disrupted. There will be increase and decrease in demand for various products. The market's trying to work that out as well. There will be winners and losers in various different sectors. Also, we started to see that play out a little bit with the original sell-off on Thursday, with some sectors actually positive on the day with the broader market down 4 or 5%. But Friday was more of a risk-off in general scenario where everything went down at the same time, even stuff like gold and silver, which has nothing to do with tariffs. In any event, U.S. markets were down 9 or 10% last week. We saw internationals down 6 to 7, the same thing in emerging markets. One bright spot was yields fell on bonds, which means that if you have diversification in your portfolio, your bonds provided some support, because as yields fall, the principal value of your bonds goes up. Kind of works opposite, right? So that's why diversification is key in markets like this. But real quick, let's talk about where we are right now in this whole scenario. Over the last couple of years, we've been kind of in a scenario like this right here. Market's going up. This green marker doesn't work anymore. That's because we don't use these very often. We'll use red instead, or blue instead rather. Market's going up. People are excited. There's big time smiley faces here. Everyone's saying, hey, over the last 18 months or so, let's do a little more risk in our portfolios. That's what we want. Even if the plan doesn't need it, or doesn't warrant any additional risk, you get a lot of that. This is something that happens with a lot of folks, especially retail investors that do everything themselves. In any event, we get there, things start turning over a little bit, kind of from a blue to a red scenario where it's kind of mixed. Historically, over the last couple of years, what we've been seeing is in this type of situation, people come in real quick and they buy the dip. So instead of going down further, a lot of times the market will just work itself back up again. But in this case, we're part of a broader time horizon or a full economic cycle. So there's still people putting some money in. As we keep moving down, not really sure where we are on this sine curve at this point, but let's call it halfway because everything happened real fast and we're already 20% off highs in a lot of markets, which is considered a bear market, and oftentimes at least more than halfway there on the downside risk. We get here, people say, oh my gosh, get me out, sell, right? That happens somewhere around this region. And then as things start to turn around, you get the blended colors again. You have everyone trying to figure out as we move this way and stabilize, we try to figure out, hey, when do we get back in the market? That's where people are generally. What we recommend, it's conventional wisdom, but it is an old adage, no doubt, that in this scenario, we don't sell right here. If you have dry powder on the sidelines, if you have CDs burning a hole in your pocket or savings reserves that are excessive, make sure you have at least 3 to 6 months of your living expenses in cash. Move forward past that. Anything above and beyond, you should be considering adding to your investment portfolios at much cheaper prices. We're also going to be sending out information about possibly doing Roth conversions, kind of making lemonade out of lemons here for clients that are eligible, so be on the lookout for that. Remember, hope is not an investment strategy. Have a great week.